tough pandemic. And just then, the Russia-Ukraine war once again calling into question the growth prospects of the India story. We're here at the World Economic Forum in Davos, and I am privileged to be joined at this time by four really sharp voices cutting across different sectors of industry and government. I want to introduce first and foremost the one and only Amitabh Kant from NITI Aayog. Welcome, great to have you back. Mr. President Sanjiv Bajaj, President this year of the Confederation of Indian Industry. Thank you very much, Sanjiv, for joining us. Adar, Poonawalla, getting quite a rousing reception here at Davos. Many people coming up, congratulating him for the work he and his company have done during the pandemic. And finally, Amitabh Chaudhry from Axis Bank. Thank you so much for joining us. I'll start with Sanjiv Bajaj as President of CII to give us a macro sense of how India Inc. is seeing the growth prospects of the India economy being hampered as a result of all the geopolitical tension we're seeing on account of the Russia-Ukraine war.
So Rahul, as you clearly started off saying, that there is a level of uncertainty in the air. Now, if you think about it, the last couple of quarters, India actually saw growth coming back. On the ground, consumer growth started growing. We've seen that the banks have cleaned up their books over the last 2 years. They're sitting on significant amount of capital. They're ready to lend. So we've got those tailwinds going also. Yes, because of the war and because of the recovery from the pandemic prior to that, we saw uncertainty in supply chains. We are seeing higher levels of inflation. The government, led by the Prime Minister, has only 2 days ago tried to address that by significant cut in fuel prices, which was one of CII's requests as well, and a number of other input duties, due to which we should start seeing prices coming down. This should help inflation, and really that's what we need, because from a middle class consumer's point of view, you ease his pocket on food and fuel prices, and we are hoping for a good monsoon as is forecast right now. The consumption cycles should start again. The other good thing is, if you see in the last 3 or 4 years, private sector has not made significant capex. We are just starting to see that come back also. So you're going to see capex coming in. You're hopefully going to see that consumption with inflation. So inflation needs to be tamed. RBI has also started working on that. I think it's a matter of time before growth starts coming back.
One of the factors holding back the growth engine kicking into full gear, Amitabh Chaudhry, was the absence of private investment. Are you seeing any
back for sure? And I think if you look at the credit growth rate in April and May, for the first time after a long time, we have seen double-digit credit growth. But most of it is still coming from the retail side. I think the capex has started picking up on the SME side. The commodity cycle has done quite well, so a lot of investment happening there. But are all the private players talking about large capex? Not as yet. We're still waiting for it to pick up. I think the Russian-Ukraine war and whatever you're seeing around us, the geopolitical tensions and supply chain shocks and inflation is slowing it down a little bit, or at least pushing the conversations a little bit beyond what we would like to see. But given the India story, given what is happening around us and what especially is happening in India, I think it's just a matter of time before we start seeping it in and
But it's been a matter of time for quite a while.
I know, but we never predicted that, Russia never predicted the war will last
Is
that
there,
long.
Amitabh Kant, a sense of exasperation at some level in government that you reduced corporate taxation thinking that this would spur investment and growth? Then the pandemic happened and that offtake never really took place. Then as soon as capacity utilization reached the mid-70s, you thought, okay, here's an opportunity where again industry will start investing. Then you've got the Russia-Ukraine crisis, you've got inflation, you've got interest rates going up. So is there a sense of just pulling your hair and saying, when does the economy go into high gear?
So Rahul, go back to 91 reforms. Actually, it took us a while for growth to really kick off. The government has carried out a vast number of structural reforms across a whole range of areas. And recently, in the context of the Russia-Ukraine war and the inflation, slashed the excise duty on petrol and diesel. We've also rolled out the production-linked incentive schemes across 14 sectors. We're seeing huge interest there. Several areas like electric mobility or electronic mobile manufacturing, advanced chemistry cell, battery manufacturing, all these are cutting-edge areas of growth. We've seen a really huge response. I personally feel that it's not about just the next 4 to 5 months. The challenge for India is really to grow for the next 3 decades year after year at high rates. That's important. We've grown at high rates earlier for a short period, but we need to do this on a consistent basis. And all of us, including you, need to take a long-term perspective of this. The buzz in Davos is really exciting, and the good thing here is that everybody is looking at India. The buzz is good because there's a number of state governments who are represented here. It's good to see states coming and trying to attract investments. They're being very, very aggressive. And my view is that with all these reforms, the states grow, then India grows, and India grows on a consistent basis. And I think the mood is good.
The COVID-induced lockdowns in China created an opportunity to tap into the China plus one recalibration of the global supply chains. But if you read a lot of the international commentary, they're saying the biggest beneficiary of the growing trade tensions between the United States and China has actually been Vietnam, and to some extent, especially in textiles, Bangladesh, and this sense outside India that you said they're looking at India, but they're actually going out and investing more in Vietnam.
So let me first put this in a perspective. Bangladesh has invited investments in textiles. Vietnam has got some investment in some products of electronic manufacturing. But if you look at India and the vast domestic demand and the size and scale of India, there's no alternative to China but India over a long period of time. These are smaller economies. They'll attract investment for some time, but if you want to do it on a sustained basis over a long period of time, there is no other country than India. And actually, in all these areas of PLI manufacturing, we've got some really good investments, both from international companies as well as from domestic. So I personally see that we just need to keep sustaining this over a long period of time, and I have no doubt in my mind that India will grow and grow on a sustained basis.
Adar, Poonawalla, you were recently in the United States meeting with Anthony Fauci and traveling the world, meeting several top experts. One of the things holding back industry from investing is the fear that in some form and shape, the pandemic could rear its dangerous head once again. What's your broad sense of how much of an inhibitor to growth the pandemic could potentially still be?
Well, I'll echo some of the points here in the sense that as soon as things stabilize, as soon as that confidence comes back, there's of course no competition to India today. I've talked to large groups and investors. We are definitely the preferred destination given our regulatory reforms and our environment and the market and all of that. Having said that, I think, as you said, because of the war partly and because of this fear of, another wave coming, yes, they have held back. But if you wait for perhaps a year, or maybe less than that, you've got all the measures the government is taking to contain inflation, and also, as you rightly said, in about 7 to 8 months, I see a complete change, or hope to see a complete change in the investment that'll take place.
You're saying it could still take 7 to 8 months, and let me bring in TV Narendran from Tata Steel in on this, because the war could drag on for much longer than 7 to 8 months. And as you attend these sessions of the World Economic Forum, there is no clarity on when the war ends. The question is, how long will it be before the much awaited investment cycle, Indian industry and global industry wanting to invest in the India investment story, so that growth in India can really take off and India can achieve its full potential?
While inflation is a concern, and I think the central banks are acting against it, but I think the fundamental long-term story is still very strong. And given the disruptions in China because of COVID protocols, I think there's greater interest in India from what I hear from the potential investors in Davos, for instance. They look at India as a market where you can scale up, a market where you can source from. So I think the medium-term, long-term story is very strong. And I think people will continue to invest in India because of the potential demand in India.
Sanjiv, Bajaj, we've seen over the last few months, several MNCs announce departures from India. Came in over several years ago, tried various things, didn't work out. One of it could just be a pure play of factors of demand supply and how those companies succeeded or failed in India. But do you think in aggregate that sends some kind of a message that a lot of these companies came into India, dipped their hands, ultimately ended up burning their hands and couldn't succeed?
I don't think so, Rahul. I think there are many more stories of successes in any market. And as India gets to be more and more an open market, we are also a globally competitive market. So there will be companies that will not do well. There will be companies that have priorities in other markets. And that's the challenge if you are a foreign company. You will go and choose where to allocate your resources most efficiently. And sometimes there are other compulsions that they have, domestic compulsions. Overall, if you see over the last decade, we have attracted significant amount of capital across so many different parts of the economy. Not only that, look at what private equity has done. 100 unicorns, third largest startup nation in the world. Indian entrepreneurs are everywhere. So the reality...
But do you think that could be changing? Because, for example, in April, we didn't see any unicorn being announced, and now venture capital isn't quite as easily available as it was last year?
I don't think you can play this month on month. That's not how businesses get built. The reality is we are going through a period of uncertainty. So you will see a period of slowdown. And it's not only limited to India. We are part of the global network. We are seeing this happening around the world. But as Amitabh ji was saying, India has once again this huge opportunity where short-term combination of exports, combination of China plus one, but medium to long-term, we can be the one. We don't have to be China plus one. The world has realized that from far sourcing to near sourcing, the world now wants, as somebody said, sure sourcing. And India can be that sure base. Number of things we have to do. The PLI schemes already announced, lower corporate tax amongst the lowest in the world already announced, and I'm sure the government will do more as required. And our large domestic consumption base, our large middle class, as that gets further activated, you will see this happening.
Amitabh Kant, production-linked incentive schemes has been one of the government's big pitches to attract foreign investment. Opinion on that very conflicted. Some say it's only partially successful. You're looking at the numbers and the maths. Do you think it's begun to add up to say that PLIs are helping India become a key manufacturing destination?
So Rahul, we've announced PLI across 14 sectors, 13 plus the drones. I've recently analyzed and examined this scheme. It's going to give you results across, I think, 12 to 13 sectors. The 13th one I'm saying is because the steel one is not yet announced. But we've had a very, very good response across all sectors. Some of the sectors, cutting edge sectors like advanced chemistry cell, because what we are trying to do is really to get into cutting edge areas of growth which will give you greater value. Secondly, we must understand that this is very outcome oriented scheme, unlike capital based subsidy schemes. That is, you have to achieve production to be able to get the benefit of that scheme. And therefore, we've started seeing results in electronic manufacturing. We've started seeing results in automobile, electric mobility. We've started seeing results of investments in advanced chemistry cell battery. All these are new areas of growth, and they are the real high value of growth. The important thing is that India must get into sunrise areas of growth, because that's where the global values are going to be created. And this is the first time India is making this paradigm shift into completely new emerging areas of growth and getting into technologies which will be the future drivers of growth. So I'm absolutely confident that PLI will really drive India into the manufacturing era. But it's important to understand that India must fire on all cylinders. It's not just services, it's not just manufacturing, but agriculture as well. And to my mind, the startups are disrupting in a manner which we've never seen before. I mean, when we started off this movement in 2016, we just had 538 startups. Today, we have 68,000 startups. So 100 unicorns in a period of 4 years is just phenomenal to my mind. And they are the ones disrupting established
But a lot
companies.
of them are getting bruised on the bourses.
Yeah. So, Rahul, we are...
Someone, I remember, some members of Indian industry were saying this is not making sense. And now, as the stocks tumble, as investors seek genuine growth and revenue and profits, they say, yeah, we told you so, it was never going to make sense.
So, Rahul, I think two very important things to understand: that we are firstly in a globalized world. If the global economy is going to see inflation, India is also going to see inflation. Secondly, we are in a market economy. If the market economy is going to see some disruptions, some aspects of Indian economy are also going to get impacted. I don't think we can divorce ourselves from the global economy. This will happen, but the long-term prospects of young entrepreneurs creating value is enormous, and they've shown that it's possible to do this.
One of the huge advantages that China offers the world is sheer scale. As India attempts through PLI and various other policy interventions to attract different forms of manufacturing to India, the inability to provide scale you provide adequate scale to cater to 1.3 billion Indians, but to become a key part of a global supply chain, do you think that challenge in terms of infrastructure, ports, roadways, hasn't been adequately addressed? It's been addressed relative to where we were, but relative to a global comparison, we still have a long way to go. Some of the sectors that Amitabh Kant mentioned, where India hopes to be, is where China is already sitting.
Yeah, that's true. But I think over the last 3 years, we've seen significant commitment and significant action on the ground. I think every year there's a 30-35% increase in the budget for infrastructure, which is positive because logistics costs in India are 12 to 14%. It should be around 7-8%. So I think Indian industry is building competitiveness within the factory gates, and the government is helping us build competitiveness outside the factory gates. So we're moving in the right direction. India is a market where you can even build scale locally. 1.3 billion size market is 2 times the size of the European market, right? But of course, the purchasing power is much less. So as India becomes wealthier, consumption itself will drive a lot of demand. And if you look at the auto industry and auto component industry, it's a great success story in manufacturing of how they build scale for India, and now they're global champions.
Adar, Poonawalla, the one place where we did see some manufacturing scale was during the pandemic in the pharma sector, and thank God for that. But a lot of people would be wondering and watching and wondering what happens to all those production facilities you created with some 1.5 billion doses. I think that's the annual capacity. When there's no pandemic and those many vials aren't required, what happens to that capacity?
Well, that's exactly the discussion we're having here with all the global stakeholders, that how do we keep sustainable capacity idle and prepared for the future pandemic. Now, we've built an additional capacity of 4 billion doses. So we could technically vaccinate our country in 3 months. And that's the level of preparedness that we've invested in, despite the risk going forward, so that we don't have a situation of even a month's worth of shortage going forward. Now, whether other regions and countries will do the same, that's yet to be seen. You don't have the kind of global talent in those regions that you have in India. So we have that advantage, a loyal, dedicated workforce. So these are the things that India brings, which, I've been asked to set up manufacturing on the African continent and other parts in South America. But it's a challenge over there because of these reasons. And till that comes up, the sustainability question will be difficult to,
There's
answer.
a lot of chatter around how the next pandemic could be another big threat to global growth. Nobody is quite certain what form and shape it can take. We're seeing monkeypox cases being reported, but it's not as contagious as the coronavirus. As someone who's speaking to different experts and possibly preparing for it as well, what real form do you think the next pandemic could take? The last one came 100 years ago. Is the next one really around the corner, or is that just something that pharma sector health experts say to put people on guard?
Look, it's very hard to speculate. The only hope is that it's not as contagious as a coronavirus. And our hope is that the next gen vaccines and treatments that we develop, both in India and overseas, will be able to block transmission. The problem with today's treatments and vaccines was, yes, it reduced hospitalizations and reduced deaths, but it didn't block transmission like some of the traditional vaccines have. I think that's where we're trying to focus our research, to reduce and prevent as much disruption in the economies to lives and livelihoods as well.
Sanjiv, Bajaj, what are you picking up in your conversations with different members of India Inc. in terms of their appetite to want to invest now? A, the fear of the next pandemic, no matter what form, shape and time it takes. Secondly, the continuing geopolitical tensions on account of the Russia-Ukraine crisis, none of which have a finite end date. So I think Amitabh Chaudhry said in 7-8 months things will start looking up, but nobody knows. It will be 7-8 months. It could be much longer.
See, hopefully the pandemic, the worst of the pandemic is hopefully behind us. While it doesn't mean that we get careless about it, but we don't have to worry about it the way we did a year ago. The war, yes, is an uncertainty. India has a couple of levers to work on. Our domestic consumption. For that, we do need to get inflation under control. We've talked about what the government is doing. They have to keep an eye on it. They may have to do a few more steps, depending on.
Like to see from Amitabh Kant and from the government.
So again, you have to bring inflation. The next thing will be on food. If you don't have a good monsoon, the government will have to step in there as well.
That's not in anybody's control. And we've
so
seen the heat already. We know that wheat production is going down.
If the monsoon is good, luckily the government will not need to step in on food. So what I'm trying to say is the intermediation will be required if the monsoon is not good.
What kind of intermediation would you require?
Government will have to see how to subsidize food. Because if you have to
You know,
remember, it's
there's
one
been
of
a
the core
lot of
items.
talk. It started with the Congress manifesto of 2019 of some kind of a basic universal income or direct transfer, which the government poo-pooed initially during the campaign, and now is the government warming up to that idea? Because a lot of sources said, he said, she said, which seems to suggest that the government is now willing to consider some kind of universal basic income. Is that inevitable?
So Rahul, we've transferred, and we're the only country in the world which
Not
has
in the form of a universal basic
No,
income.
1 second. We've transferred food subsidy to 840 million people
Sure.
in the country, direct benefit transfer. India is the only country in the world
Sure.
which is able to do this seamlessly because of biometrics, mobiles, and bank accounts,
Correct.
which the Jam Trinity which it has built up. So my view is that I don't need a universal basic income. I don't think you need it. I don't think Sanjiv needs it. But the people below poverty line need it. As long as you are providing, the government has taken at the peak of the pandemic crisis, taken care of 840 million people living either below or even above the poverty line. That's an enormous job. And that's a path-breaking initiative which no other country was able to do. And to my mind, that is takes care of all aspects of taking care of the citizens of India.
Amitabh Chaudhry, from your perspective, what more would you like to see from the government to try and be able to control inflation, especially on food inflation, where a lot of it is dependent on factors beyond mankind's control, including the monsoon?
I don't think government can, in the short term, really do anything about controlling food inflation. As Sanjiv said, that if the monsoon is not good, we are seeing, you mentioned about wheat production coming down, then government has to intervene as it is trying to intervene. I think the other job has to be done by the Reserve Bank of India, which is already doing that. They have to raise interest rates to bring the demand down, the liquidity down, so that the
Estimate, how far should interest rates rise given the current macroeconomic conditions in India and globally, and the compulsions on account of what the US Fed and other central banks are doing?
So I would say that the first step is to actually get it to the pre-COVID levels, which is 75 to 100 basis points increase over the next couple of months. After that, the data will speak for itself, and then RBI will react to that data. My view is that the problem is, because of the external factors, is not going to be that easy to tackle, because everything, as you said, is not in our hands. But the government is being proactive. RBI is being proactive. I'm told Governor today itself talked about how there will be increase in rates. So he's signaling to the market that we are going to go after inflation. We will try to control it and ensure that we get it under control as quickly as possible. The factor which is not in government's control is the externalities we talk
But
about.
as the US Federal Reserve also increases interest rates, a lot of foreign portfolio investment is going back to the US, and therefore potentially making the India story less lucrative than it was at a time of low interest rates.
And that has always happened. So the dollar is strengthening against every currency because of the fact that the Fed has announced proactive, aggressive rate hikes. They're also withdrawing liquidity. But I think it's a temporary phenomenon. The moment they get under control in the next 12 14 months, they will stabilize, and the money again has to go searching for the right returns. And as you talk about that, India does offer itself as a destination of where you can make the right returns, safe returns, over a long period of time.
How real, in your view, is the concern of the United States slipping into a technical recession over the next few months?
The commentary has definitely shifted to lower growth and potentially a recession. I think the very few, if I have to stand out, I will talk about a recession, but otherwise the commentary is definitely talking about lower growth. I think the Fed is quite confident they can manage with lower growth. The stock markets are already reacting, the interest rates are already reacting. Hopefully they'll be able to manage it. But yes, if there is a recession, there are enough tools available in the hand of Fed to raise rates further and get under control or infuse liquidity if necessary. So I think the tools are all available. They have been tested in the past. So why should we assume that recession will happen?
One of the critical questions facing the world at this moment is whether it is inevitable that the globe will be divided into two trading blocks: the United States, Europe, and allies on the one side, China, Russia, and allies on the other. I want to get a sense from this panel here at the World Economic Forum on how they see global trade tensions and India's role. Ideally, we'd like to keep China on side because of what's happening along the line of actual control. That may not be in our control. Sanjiv Bajaj, I'll start with you. How are you viewing these growing trade tensions and the fear that the world, far from going towards greater globalization, could be split into camps where you trade with your allies in regional trade treaties?
The reality, Rahul, in the last 5-7 years is we have seen pressures to a globalized common world ever since the Second World War. We've seen the benefits of that. As you're saying, possible two trade groups may come about. This is really driven by as much by people and domestic politics as it is by global geopolitics as well. And that's why it's very difficult to try and forecast where it will head. What we should do as a country is to know that if this happens, what's the best position we can put ourselves to gain the maximum out of it? Because the more this happens...
How should we gain from the geopolitical dynamics as they play themselves out?
Very clearly, the larger bloc, which is the Western bloc and even the Southeast Asian bloc, will look for opportunities from countries like India to create that manufacturing base, to create that alternative to China. It's going to take a while to do it, but they will be looking at us, and each step we take in the right direction will take us closer towards being that strong partner to them for, as Amitabh said earlier, not for 5 years, for the next 3 decades. That's our window of opportunity, and really it's only for us to lose it.
A lot of people here in Europe, and as you speak to American commentators, want to push India to take a side, a binary, that be with us, you're not enough with us. How do you see these growing trade tensions play out from here, and what do you think India can do to capitalize? Because a lot of people in the United States think if you want to benefit from a strategic association with the United States, we need to know you're on our side, and right now we're not sure. It's complicated here.
So Rahul, let me step back a little and let me first say that both fiscal and monetary policy have their limitations. They can take you till a point, not beyond that. Important thing for India is to continue to sustain its reform process unabatedly. Keep on reforming, keep on bringing in private sector play, like we are doing with asset monetization, where we overcrossed our target. The second thing, important thing to understand is that the world grew when there was no challenge of climate change, and the multilateral trading order was growing and expanding. Both of these are actually not challenges, but they are massive opportunities for India. Both the weakening of the multilateral trading order, and India needs to step up its game. It's done that, but even more step up its game on bilateral trade. And secondly, climate change gives you an opportunity to technologically leapfrog in many of these areas and look at technologies where the world will be in the next 4 to 5 years and leapfrog there. And to my mind, going digital and going green, the government has done it in a very big way. It's for the private sector and both of us together to work in partnership to really drive accelerated digitization and accelerated green growth for India.
Are you disappointed with the way the LIC IPO opened, and on account of uncertainty over fuel prices, even the disinvestment of BPCL seems to have hit a big roadblock, and now we're seeing a lot of private petroleum companies saying, given how the government increases prices, reduces prices, there is no certainty, no private sector player would want to be in this space.
Rahul, I'm never disappointed. I only look at the positive sides.
The poor investors who put their hard-earned money in the LIC IPO.
That's exactly what I'm saying, that you'll have to wait for better days. All these days turn around after some time. And that's what I'm saying. Each one of them who are investing now will at some point of time make money. The stock market works in that manner. It comes down one days, but don't assess the potential of a country based on the stock market.
TV Narendran, your sense of the world being split into two trade blocks. One is that it is inevitable, but a lot of champions of globalization say that this is more rhetoric. Actually, smart money will stay where it is smartest to stay, and staying in China, even the pandemic has shown ultimately supply chains were resilient. I mean, there were problems, but they were still able to get the act going faster than some of the other countries. How do you think India Inc. can potentially benefit from the opportunity this presents?
So clearly, as Sanjiv said earlier, there is a move towards optimizing supply chains around resilience, surety, etc., rather than just cost efficiencies, right? So that's one thing that's happening. Second thing is what you said. I think there's more regionalization and nationalizations of supply chains. Thirdly, like I said, because India is one of the few countries which can be a source and a market, Indian industry can leverage that. India is one of the freest markets to invest in. When you look at flows, capital flows, we keep talking of trade flows, but you look at capital flows, investment can come into India, pretty much you can own most industries 100%. You can't say that about most countries, including China. So I think we've created an environment where there is a potential, and we've continued to work on making it easier for investors to come in. So I think the tide is certainly turning, in my view.
Adar, Poonawalla, from a perspective of the pharma sector, the idea that the world could get split because the pharma sector in India faces some pushback from companies in the United States over our policy on generic drugs. Do you think there is great opportunity in India aligning with the West and with the United States if and as the world gets split into trade blocs?
Well, India is never dependent on, let's say, Russia, for example, as a marketplace. India has always exported its pharmaceuticals and vaccines to all over the world. I think the US will have to become a little more open in accepting, treatments and vaccines being registered and sold over there. They have a lot of artificial barriers to entry, which need to go down. And I think you're seeing more of that. More and more Indian companies are selling in the US and in the West. Take, for example, the made in India vaccines like Covovax were the first to go from India and be sold in Europe and Australia. That's never happened before. So we are pushing through certain milestones in our industry, as well. And the pandemic has been a sort of unfortunate situation, but in the sense it's also presented a lot of opportunities for India.
If you see the news in India, whether domestically or internationally, Sanjiv, Bajaj, a lot of the commentary at this moment is about different kinds of social tensions on account of, say, what's happening at the Gyanvapi Mosque in Kashi. And there are two views on this. One is that such social tension is never good for any country because foreign investment looks at it, gets wary of what may happen, the uncertainty religious tension may create, and choose to stay away or be wary. The other is that if the market provides an opportunity, investment will come, whether it's domestic or international, nobody really cares. Your father was I've been here with him many times, very, very outspoken, and I'm very curious to know from you on which side of the divide you're on. Like, would you think that these social tensions are of concern to investors as they choose to decide whether to invest or not really?
Investors will always look at a climate where they get with a reasonable level of certainty and adequate risk-adjusted return. They will look to being in markets which respect the rule of law, which respect everybody living in those countries. And the way I look at it is that you can have short periods of time where you see certain uncertainty, you see new normals developing. If I were to look at India, again, in a longer period of time, we are one of the calmest countries in the world. We've never gone and attacked any other country ever in our lives. You will have periods of tensions. It is for politicians, for people, for each one of us as private individuals to work towards sorting that out. From an investor's point of view, yes, there is a level of certainty that investors look at for a risk-adjusted return.
Amitabh Kant, does this come up in conversation? It's across the media, where if you look at any of the international papers, it's definitely front page or being pushed very heavily. But in your conversation with different countries, trade delegations, companies, do you think this is a fear which could hold back the India story?
Well, I met about 30 different people. I participated in about 5 or 6 different sessions today. Not a single person raised this issue. They all talked about the attractiveness and the positivity of India, but no one raised this issue. The first time I'm hearing this is from you at Davos.
He's always glib with words. Even if he heard it, what else do you expect Amitabh Kant to say he's on TV?
No, this is a issue which is being raised in India. Nobody here in Davos is even mentioned it or bothered about it. Let me tell you this and be honest to yourself. Nobody here has talked about it other than Rahul Kanwal.
Okay, interesting. I want to get TV Narendran on in this because you're also interacting a lot with investors in Europe and elsewhere. Do you think this becomes an area of concern which should be looked at very carefully? Or if they are willing to invest in China, given all that's wrong with the China story, it doesn't really matter?
Yeah, I think the answer is there, right? I mean, no country is perfect, right? Every country has its own challenges. And I think people look at India as a large, complex country, which is a very vibrant democracy, and there will be issues which are raised and get sorted out. I think that's the way they see it. And I think there are different parts of India. If you're not comfortable in one part, you can go to the other part. So I don't see it as a big issue. I think there will be more questions asked about what's our position on Ukraine, for instance, etc., for global companies, because there's a position being taken on that. But I don't think it's going to deter investors yet. I don't think we've reached that stage. Yes, it's...
One of the gauges of the mood of the economy, Amitabh Chaudhry, is the manner in which the markets are faring. And the outlook, even at this moment, looks bearish. From your perspective at Access, what's your sense of how much further the market could dip? Do you see some kind of a bottom building, or do you think that it's too uncertain to be able to say, and therefore being wary is the way to go?
Well, if you could predict the markets, you would not be sitting here.
But you're
discussing
broad
something else. But no, I think that right now the mood is a bit bearish because of all that's happening around us, especially the uncertainty and the volatility. But as Amitabh Kant very clearly said, that it's just a matter of time before things come back. And I think the Indian story for the next couple of decades looks very, very strong. And if we can execute on that story and ensure that we don't go about 2 steps forward, 1 step backward, I think it can be a great time for India.
Well, the world has changed in different ways, and so has the World Economic Forum. Ordinarily, would be shivering if you were sitting here. Do you prefer the chill of January or the sun of May?
Oh, the chill of January any day. It's far more fascinating.
When people come
you
in
have
January, they're cribbing all the time about how cold it is.
Yeah, but it's a different. It's very, very different. It's very nice. It's lovely. This view is much like you'll get in Dharamshala or you'll get in Chamoli.
So
it's like being in Uttarakhand.
Okay, Sanjiv, which one do you prefer? You've been coming here for a decade plus, slipping in the snow or walking in this Dharamshala-like weather?
I would always prefer the spring of May, but we seem to be here in the Indian summer, sweating away.
You can't say that because anybody who is watching, and given that the temperature is 45, 46, 47, they say you can't be sitting in Davos and complaining about how hot it is. But it is hotter.
Relatively, it is very hot.
It is hotter than it usually is over here, and that's one of the other challenges to do with the climate change, which we'll discuss at another time. But this has been a fascinating conversation. We got a cross-sectoral perspective on how your outlook is and how you see things shaped from here. So TV Narendran, Amitabh Chaudhry, Adar, Poonawalla, Sanjiv, Bajaj, Amitabh Kant, thank you so much for joining us. Really appreciate your time. Thank you.
Thank you.